so much for thank you so much for joining our webinar on comprehensive strategies for effective retirement planning. It is my pleasure to introduce Renu Maheshwari, co-founder of FinScholars, and she's also Tamil Nadu's first SEBI-registered investment advisor with over 25 years of experience in financial planning and portfolio management. Ma'am is an MBA in finance, a certified financial planner, and a CFA level 1 holder. Recognized as Best Financial Advisor in India 2016 by APAC Insider and Best Investment Advisor in India runner-up 2015 by Outlook Money. Renu ma'am is also the founder director of the Association of Registered Investment Advisors, as we call it RIA, and a visiting faculty member at ICFP. Her insights frequent in leading magazines like Bloomberg Quint, FPSB India Journal, Outlook Money, and more. With over 1,600 hours of training experience, Renu ma'am is a true mentor and industry leader. Please join me in welcoming Renu Maheshwari. Friends, just to let you know, our webinar today is in two parts. Renu ma'am will discuss today's topic, which is retirement planning, followed by details on the CFP program and a Q&A session. Over to you, ma'am, and thank you once again for joining us today.
Thank you very much, Rishi, for all those wonderful words. I happened to start my CFP journey with ICFP. It was, I would say it was a chance that I saw an advertisement, or it was a news clipping, something like that, in the local newspaper, and I reached out to the local Bajaj Capital person. They are the only ones who were running CFP at that point in time, and that's how I ended up doing CFP, and probably was also the initial ones who also became the faculty for the institute. When we did ICFP, there were no education providers, there were no institutes. We had books which I would say half of them were irrelevant. So the book, which had 6 papers, 6 sheets of a chapter, had 80% exam from those 6 sheets of paper. So we kind of joked a lot about that and said whatever. So I mean, that's a long journey which I had post getting associated with ICFP. So I have fond memories of the institute. Thank you very much, Kanaya, for inviting me over here. It's always a delight to be able to connect with your alma mater in whatever way possible. So friends, I can see there are quite a few, I think the attendants have already started joining in. We will go ahead and as your faculty and institute had asked me to talk about retirement strategies, I'm going to be talking about retirement strategies, but a little about why, where, what, and some statistics which is startling to a lot of common people, but more than that, a huge opportunity for people like you and me. I'm getting old right now. I'm probably already in the retirement category if I wanted to. But all the young kids out there and youngsters over there who are listening to this webinar, you have a huge opportunity in terms of planning and a career to be made out of this particular problem that the country is going to face. So sorry to say that it's going to be a huge problem, but you're going to be the problem solvers that will provide you good opportunity for employment for the rest of your life. Kanaya, can I share a short PPT kind of thing?
Sure, ma'am. Yeah, there is a share option.
Okay, let me just try. Okay, so let's talk about these few of the retirement reasons, the conundrum, what I call it. Why talk about retirement? We are a country of youngsters right now, a young country, the youngest in the world, so to say. Our average age is in early 30s right now. Why are we talking about retirement as a huge opportunity? Problem and threats are always an opportunity for the right people. So there is a threat, but there's an opportunity for all of us. This country of youngsters will be a country of senior citizens in 25 years. That is after 2.5 decades. So even when I talk to my young clients these days and I talk about the wonderful things that are happening in the market, the wonderful opportunities that we have in the market, and most of us are making wonderful money as well currently. So that's not a problem. The problem begins after 2 decades. That's when the country starts getting old, because currently it's a country of youngsters where lots of young hands to work. Retirement funding is not a big issue. Even if the governments have few of the what you call defined benefit plans going on, government can manage it. But if it continues to provide defined benefit for future, it will not work. It will not be able to sustain. Statistically, government will run out of money if they continue to provide defined benefit. So rightly so, the government has moved towards schemes like NPS, New Pension Scheme, National Pension Scheme, which becomes a defined contributory plan, which takes advantage of the growing markets and provides good retirement corpus for the retired person. I'll give you one statistic. After 25 years, and I think if I'm not wrong, that should be around 2048 or something like that, in Tamil Nadu, 20%, more than 20% of population would be senior citizen or 60 plus. What does it mean? 1 in 5 people are senior citizens. Now just imagine a family size. If 1 in 5 people are senior citizens, there will be on an average 2 children in the family. So there are 2 youngsters in the family. And overall, if you look at the population, 20% of this non-working population will have to be supported by the 40% of the population. Now that 40% of the population has other expenses as well, like taking care of their own children, their requirements, their own personal aspirations. Who will fund these senior citizens? And that is a huge, huge problem that the country is going to face in 2 decades down the road. So when the policymakers are insisting upon growth in the country, it is because before the country becomes old, we should become a developed nation. If we are not a developed nation before becoming an old nation, we will be in big trouble. Japan is an example where the country became old and the growth stopped. So if you look at it, last 2.5 decades, there's hardly been any market growth or capital growth within Japan. It's only now recently that it has started picking up after almost more than 2 decades. So in the 80s is where it stopped growing. But Japan survived well. People survived well. Why? Because it was already a developed country. The retired people were rich enough to take care of their needs. And that's the reason it did not face any misery of the masses or the people. So we need to grow. We need to be a developed nation. We need to have good retirement corpuses for the people who are going to retire 2.5 decades down the road. So it's a huge problem for the policymakers. What about CFPs? The huge opportunity. Why? Because retirement planning, retirement management is probably the most complicated of the whole planning process. I remember people used to, I don't know what is the current statistics, Kanaya and Rishi, but I remember retirement planning was one paper in which everyone used to flunk. Everyone would be writing twice or thrice to get through the retirement planning paper of CFP, and rightly so, because the calculations were very complicated. Now you can imagine what are we trying to do? We are trying to forecast for 30 years of a person's life. 30 years is like 2 generations. The world changes, country changes, economy changes, industry changes. Everything goes through a turmoil, and people, what they think that they might want to do at 60, when they start planning at the age of 30 or 35, and they think of what they want to do at 60, by the time they reach 60, they don't want to be doing that. They want to be doing something different. So it's the most complicated of all the planning process. And that is where it gives you a wonderful opportunity to capitalize on. Young CFPs start picking up this particular segment, and in a decade's time, you will be experts in it. And that will give you a sustainable practice for a very, very long time. Now, if we look at, and yes, this is apart from the statistics of how many retired people will be there in the country, there is one thing on the ground, and that is something which I would definitely like to talk, because that's a lot of times that also becomes a method for you to be able to engage with your prospects and show them the benefits of engaging with the planner for life. I'll give you one story, and I have just changed the names. This they are close friends of ours. We connected with them after quite some time. The son is a young boy of, I think, late 20s right now. The parents are, father wants to retire now. The father was running a successful business along with a partner. The partner lost his life post-COVID due to some other complication, not COVID, but some other sudden complication, and he passed away suddenly. That has left a void in his life, and he realized that, something can happen, anytime it can happen. Let me sort out the things and see what's happening. When they sit down to sort it out and say that, okay, if I'm not working or if I'm not there tomorrow, what happens? They've got huge properties. They've got lots of lands. And they themselves were in construction business. So obviously there's a lot of real estate. But they have about 2.5 to 3 crores. I think not 3 crores. 2.5, not more than 2.5 crores of total financial assets. Now, this 2.5 crores also includes their fixed deposits, and this is the whole family's financial assets put together. The family has been living not an upper middle class life, but an upper class life all their lives, in terms of traveling, lifestyle, expenses, parties, clothes, jewelry, everything put together. It has been an upper class life. 2.5 crore is not going to take them anywhere. Also, they have a daughter to get married. The son wants to start his own business. Now they realize that those real estate, which they thought will have huge values, doesn't have that much of a value when they try to go out and sell it. Secondly, half of the property were in partnership with the partner who passed away. So huge complications over there in terms of estate management. This is a typical thing which most of the Indians are facing today, and we need to prevent this kind of a situation for future. Traditionally, we Indians have been investing a lot in land, real estate, and gold, which is good because gold gives you sustainability and preservation of wealth. Real estate gives you growth. People don't realize the risks associated with real estate. Nevertheless, they take that risk and they end up making good money as well. They end up losing as well, but they also end up having a good chunk of wealth. But the problem is they're not able to use that wealth in their own lifetime. So it's okay for people who have got sense is that if they need 3 crores for retirement and they've got 30 crores worth of wealth, then it is fine. But otherwise, it's a huge challenge for them. So this is something which is a ground reality in terms of what is the behavioral aspect and what's the problem that this current generation is facing in terms of retirement planning. So I'm going to expand on this one a little later and give you strategies as well as solutions that how do you deal with when you have clients like these, and how do you deal with youngsters so that they don't end up in such situations. So if you look at this aspect, and give me a moment. Just give me a moment. I'm just gonna open another document. I'll see just if I can open the document. I'm gonna unshare this one. Not able to open it. Anyway, I'm just gonna share this one more statistics verbally, and I'm sure it'll you'll all register it. See what happens these days. One more apart from the how the current people, how is the current generation retiring with more real estate and less financial assets that they can use in their own lifetime. The other problem is you look at the number of years and the life and working life of people. In my parents' generation, in my father's generation, they would usually start working by the age of 21 or so. Higher education was not so common. People would start earning post graduation after finishing their graduation. They would work till the age of 60, retire at 60, and usually would survive till 70. 70 plus was always supposed to be bonus years with the family in that generation. 60 was an average year of retirement. So people would be working on an average about 50 years in their life, from early 20s to 60s. So if not 50, at least 45 years of working life, and would spend 10 years in retirement. Right? So whatever you earn, but your retired life is 1/4 of your working life. That was the equation a generation back. What is the current situation? Everyone goes for graduation, then post-graduation, then specialization, then super specializations, and so on and so forth. The real earning starts in late 20s. And a huge number of corporates have started retiring their people by 55. They don't even wait till 60. So an average working life is about 55 minus 25, not more than 30 years. And most of the people will live well into their late 80s or early 90s. I'm from Tamil Nadu, 90s is a very common number. I see plenty of neighbors who are in their 90s and pretty okay in a way that they're walking, doing their routine stuff. They may not be working, but I've seen people who are active socially as well, very active socially in terms of, teaching Gita part or whatever their thing is. What I mean to say, they're surviving well into their 90s as well. What is the number work now? Look at the equation. We're all at CFP. We're all into number work. 30 years of working maximum, or 25 to 30 years of working or earning life, and another 30, 35 years of retired life. That's a startling number to begin with. How much will you save? How much will you invest? What will you do so that you can survive for next 30 years post-retirement? That gives you a huge, huge opportunity to be able to engage with the client, show this reality of life, to them and begin your conversation from there. The second conversation goes is about your objective. So I'll come back to the strategies because I've just put 2-3 slides on that over here. So when we talk about strategies to follow, we divide them into two kinds of strategies. One is objective and numerical work, which CFP trains you very well. But the second aspect, which is never to be forgotten in personal finance, is emotional and behavioral aspect. So your CFP course teaches you number work extremely well, but emotional and behaviorally is something which you will have to probably pick up few certificates here and there other than CFP. But at the same time, the biggest thing is develop that kind of empathy, and as you grow into the practice, tune yourself to the emotional needs of the client. Constantly keep yourself tuning to the emotional needs of your client. That is one of the most important things in retirement strategies. So I'm going to talk about both these things a little more in details in 15 minutes. It's already almost okay. It's 6 minutes to 12, so I'll have about 20, 25 minutes, right? And I'm going to talk about both these issues. But before that, let me give you this outlook that I have personally imbibed in my practice as well, is that understand that where is the client coming from and where does the client want to go? Not just in terms of finances, but in terms of his emotional well-being as well. Money per se is not a goal. It's funny, being in personal finance, we talk like that. But the reality is money is not the goal. Money is not the goal of a planner. Money is never a goal of the client. Money cannot be the goal for a planner to talk about with the client either. Money is only a tool to be able to achieve what you want to achieve in life, for you and for your client as well. So when you talk about, when the client comes to you, he talks to you about money, but he's thinking something else. When he's talking about how much money will I need for retirement, he's using the word how much money, but in his own mind, how will I survive those 30 years of retirement or 25 years of retirement? Is that a way? Do you know how to manage that kind of a situation? Can you help me out with that kind of a situation? And what's the guarantee of whatever you are doing for me today will work out in those my twilight years, when if with a person like me, if someone in their 20s come, when they retire, I probably will not be over here either. How can you guarantee those things? That your solutions will work for me. So understand that aspect, that when the client is talking about money, what does he mean by money? What he's actually looking for from that money? And that's where your conversation should start, and that is where your conversation should end. In between comes the part of number work, numerical, objective part. Your conversation, your engagement in terms of managing any financial goal for that matter, not just retirement. Retirement happens to be more complicated a goal, and hence a little more work around it. But it should begin with what is the emotional and behavioral need of, what is the emotional need of a client? How do you manage that behavior so that he is able to follow the path that you set out for him or her? And then finally, what does he get out of that path that you are advising him? So that's the strategy, I would say, to manage or to initiate the youngsters into retirement readiness. I'll give you one more example from personal. Of course, all our examples are coming from the practice that we have done and dealing with lots of clients. For last 1 month, somehow this, no, actually I had given interview to one of the newspapers, leading newspapers, and one magazine. Somehow everyone has come to me for last 1.5, 2 months talking about retirement, and ICFP also happened to come with retirement only. So I've been talking about it, and all these cases came up. So my conversation with my young clients have also changed, and it has influenced me as well, that yes, we need to bring it out more vociferously with all the young clients. And my conversation had been the same thing, that see, you are making good money, excellent, but don't be complacent. This is what you need for your retirement, because I'm not worried about 5 years, I'm not worried about 10 years about the market. I'm worried about what happens after 2.5 decades. So bringing that reality in front of your client sometimes helps them get a perspective. And when they are able to get a perspective because of your inputs, that develops a lot of trust with the client, between the client and the planner and the advisor. Now let's talk about the middle portion of our conversation, which is the objective and numerical work. And that's something which CFP trains us very well. But what is it that is not told to us in those books or in that number work is something which you need to focus on. CFP in all its methodologies teaches you time value of money extremely well. Through all its numerical examples, exercises, case studies, gives you a very good training on how do you do that number work, incorporate, make the complicated time value of money problems in terms of how do I put it? Dealing with multiple goals at the same time. The client has come to you, he has got this earning, he has got another earning, he might get some money in inheritance, and this earning may go down, he wants to start his own practice, his own business, so some money will go into that, but then his earnings will go up. Then he needs to get send his son for higher education, needs to take care of his old parents. These calculations can be as complicated as life is. CFP gives you very good training on that, right? So my suggestion to all of you, all the students who are here and the other aspiring ones who are in the audience, is to look at that number work very carefully. Don't focus on that number work only to pass your exams. I know that training, it becomes a primary objective to pass the exam. But sometimes you pass the exams and you still don't get the concept. If you don't get the concept right, you will not be able to solve your clients' real life problems. Life is not a textbook. Life is not just number work. Life is a whole big, complicated affair. For you to be able to solve those complicated affairs of your client, rather I'll put it like that, for you to be able to charge fees and demand fees that you think is right for you, you should be able to deal with those complicated life problems of the client with your number work. If I would put it like this, that numbers are a very abstract concept. If you look at it philosophically, India gave 0 to the world. India also gave infinity to the world. Actually, from zero came infinity. All the numbers lie between 0 and infinity. But if you think about 0, it is such an abstract concept. If you think about infinity, it's a huge abstract concept. All the numbers of 1, 2, 3, 4, 5, 6, that's how becomes higher level mathematics is an absolute abstract concept. So why did this mathematics develop? Because we want objective numbers to predict future or to plan for future, which is very, very abstract. So that is, look at all the numbers with that kind of a outlook. Don't look at the numbers with that objectivity of 2, 3, 4, 5, but look at that abstractness of what 5 means to you today and what 5 meant to you 10 years back and what 5 will mean to you 20 years down the road. Objectively, when we do it with time value of money. But do not forget that abstractness of number work. If you put that, if you are able to bring that abstractness of number work, if you're able to comprehend that abstractness of number work and then extrapolate it on your client's life, that's when you get solutions. It's like numbers falling from the sky and you can see a pattern of what will happen in future. I'm not saying we become astrologers or anything. I'm just trying to tell you the strength of these numbers. I'm telling you I'm trying to give you a glimpse of the strength of these numbers and the damage that you can do to the client if you are not thorough with these numbers. I have seen a lot of people coming out with interviews and articles. How much should be the retirement withdrawal rate? 4%. But you can't give that number like that. First of all, where did this 4% come from? Are we aware of that? 4% withdrawal rate came from American economy of last 50 years or 100 years. What happened in American economy last 50 years and 100 years will not happen in India next 50 years or 100 years. 4% thumb of rule cannot be a sacrosanct thing for a retired person. If a person picks up that number, picks up a mutual fund and says, okay, I've got now 3 crores in the mutual fund, I'll keep withdrawing 4% per annum from this fund. What happens if he continues to withdraw 4% even during a COVID year or a 2008 fiasco kind of a year? Numbers should be dealt with very, very careful, with lots of care and lots of attention. Then someone has come up with a 3.33%. That in Indian circumstances, 3.3% will probably be a better rate. Again, rule of thumb is rule of thumb. We need to be very careful about playing with numbers. All these derivation, integration, calculus, complicated calculations are only calculations. They just give us a glimpse, they give us a view, they do not give us the reality of what will happen in future. So how do we deal with this real problem? The real problem is that I've got the objective numbers, which I was taught. I did the whole projection, fine. But I don't have the confidence to tell the client that this is going to be right. And how will I have the confidence? Because actually, I'm not sure. And I cannot be sure. That's a reality of life. So how do I offer it as a solution to the client? And how do I make sure that the client is safeguarded in terms of when it comes to his future? So we come to the second aspect of all of these numbers. Look at every single number, understand where that number is coming from. So when I said, in my personal practice, even when I have been asked that question a lot of times, what is a safe withdrawal rate? I said, I'll never give a rule of thumb in a public forum like that, because then the danger is that people will pick up that one number and say, okay, this is what it is, and I can go by it. Because I know where that 4% is coming from. How that 4% was calculated. I know the whole number work behind it. I know what asset allocation they took when they calculated 4%. I know what assumptions they had made, that this much will be invested forever, this way it will be, the money will be invested, the markets will go in this direction. I know all the assumptions underlying it, and that's the reason I say I'll not give that rule of thumb of 4%. And I could have that confidence to be the contrarian in the whole crowd of people when everyone is touting that 4%, and I stand out and I say, I will not give you this number, because it is a rule of thumb. Retirement is a very, very precarious thing to be run by rule of thumb. If my client or me in retirement run out of money, where will I go? I have got no other recourse. If I don't have enough money for my son's education, I can go for education loan. He can go for education loan. If I don't have enough money for my son's wedding, I'll go for a court marriage. Life doesn't stop there. But if I don't have enough money for retirement, where will I go if I run out of money? It's a very, very, I always say it's a dangerous thing to tout those numbers without understanding the underlying dangers of talking about such numbers. So understand when you're doing, and this is something even when I used to teach, whenever I go as a faculty as well, I always say, understand in a simple formula of time value of money, which is just a simple compound interest formula from our high school, or not even high schools. I think 6th, 7th is where we are taught that formula, that amount is equal to principal into 1 plus r by 100 raised to the power time. Now understand each of this single number, where it is coming from. Where is this P coming from? Will you get this P or will you not get this P? What is the probability of your having that kind of P or not having that kind of a P? Discount for that. Look at T and understand where is this T coming from. If you are assuming life expectancy for a client who comes to you, he says, hey, I'm not going to live more than 15, 25 years. I'm not going to live more than 75. I don't want to live beyond 75. Just plan up to 75. And I get clients like that. Hey, why are you taking 90, 95? I'm not going to live beyond 75. These days, there's so much of stress in lives and this and that. I'm not going to live. And I ask them a simple question. What is your mother alive? Yes. How old is she? 80, 78, 75. What makes you think you're not going to live beyond her life? Statistically, our generation is going to live longer than the previous generation, and so on and so forth. We may be seeing young deaths post-COVID, but it still does not, it may spoil the average statistic, but remember, all of us who are surviving will live longer, much longer than our parents, in spite of everything, until and unless there is some other environmental disaster, which I am not privy to. I do not know how to discount for that. I would rather plan on the conservative side. That means higher number of years for a client as per life expectancy. So if the father passed away at 95, I better plan for 100 years. If the father planned for 90, I better plan for 95. That kind of a conservativeness for the time T. Then comes the biggest one, R. What is the rate of return that you are including? How are you considering that rate of return? Is it practical to have that rate of return or not? What did you account for the taxation? Did you account for change in taxation rules, if any? What is the inflation that you are considering? So in this whole gamut of numerical work, you have these variables of life expectancy, you have the variable of rate of return, you have the variable of inflation. These three are huge variables which can vary drastically. So you need to do that kind of what we call a scenario analysis with all the variables, and then look for a probability of what is a possible solution and what's not a possible solution. In number work, if you take care of these aspects of probability of all of these value drivers, of their happening or not happening, or happening in a range, you will be able to offer solutions, retirement solutions to your clients, which will not fail in any case. Because as much as we do not know the future, we always know the probability. The probability is something which is kind of doesn't fail, because probability is a long range of numbers. It is not just, so if I'm saying inflation, I say, okay, it can range from say 4.5% to 7%. Now, it's a huge range of 3.5%. For inflation, that's a huge range. Someone may come up and ask, okay, in 2011, 12, and sorry, 2009, 10, 9, 10, 11, 12, we had double-digit inflation. Why are you not accounting for that? So again, we're talking about probability. If we had double-digit inflation, how long did it last? So you can go to the next granularity, that what if we have spurts of these kind of a double-digit inflation and do it. So what I'm again reiterating, that understand each and all of these numbers, where is that return, where is that number coming from, what's the source of that number, and then have a range of them, extrapolate them, and then do the calculations, which is always going to be a range. So I can never say you can retire with 3 crores. I can say, yeah, that's kind of an average number. You need to have at least that much of money, and the rest, a lot of stuff we can take care in between as well. So that kind of I mean, I'm not going to go into all the stuff, of all the calculations. Obviously, this is not a classroom session. It's more of a session of what we are bringing from our practical practice and what made us get better results for our clients. And I'm sharing those insights with all of you. So this is something which I definitely wanted to talk about, that understand your numbers as a CFP. Two things are extremely important for you to have a good practice. One is a very strong grip on numbers, and being able, having the ability to understand the numbers, their limitations, their capabilities. And the other aspect is of being able to empathize and put yourself in your client's shoes and offer them what they need in life. So there are two things: that's something which they perceive that they need, they want, and the other thing is what objectively you think is possible for them. You should be able to tell them very clearly, in clear terms, like a doctor's bitter pill medicine, that boss, this is not possible. You cannot afford to retire. Or I have clients right now, they want to spend 2 lakhs per month, and I'm like, you don't have the capacity to do that. If you do that, you're doing, you're going to put yourself into trouble. So you cannot spend more than 1.25 lakh per month or something like that, whatever the numbers may be. So these are a few things which I wanted to share with you all. Yes, the topic name was retirement strategies, but I did go onto a slightly different trajectory of looking at what you should be looking at while devising your strategies. Because I assume this is not a classroom session. Let me just put few more lines about the strategy, and then I'll hand it over to Rishi to take you all through the other part of your program. Whenever you're devising a retirement strategy for a young kid, someone who is in 20s, 30s, or 40s, even 40s, always make sure that it's not just the inflation and return number that you're accounting for. Also account for the lifestyle change. As people grow in their lives, their lifestyles keep improving, and that's what people aspire to. But when they retire, they would like to maintain the same standard of living. Or I even get clients that see, I would like to be I've always lived a modern life or a updated life. I would like to continue to live that life. So when you're doing that planning, account for that. I actually have few clients like that. They said, see, this is iPhone. I'm using iPhone. I don't want to give up using iPhone. I drive this car. Next year, I want to be driving Mercedes. So look for that aspirational aspect as well, especially when you are planning for youngsters, because they will definitely be growing in their life in terms of lifestyle expenses. Keep that in mind. Second is, I have been reading that a lot, and so I want to bring this to the attention again in this group. A lot of times we all talk about retirement portfolio needs to be a conservative portfolio. Okay, make it a conservative portfolio. And that's the biggest mistake that we can all make. We need to safeguard the client's life, his income stream. But if you make a portfolio which is conservative at the beginning of 30 years, can you imagine what will happen 20, 25 years down the road when the country is growing with a GDP growth rate of about 8%, and you create a conservative portfolio which is giving you net of taxes about 5-6%? The person will not be able to survive after a few years, after a decade or so. So be watchful. You will probably find your own strategies as you grow into your practice. What we do is we safeguard our clients 5 years for any circumstance, and then do asset allocation and give enough allocation to growth assets. Because while the growth is happening in the industry, that's the only in the market and in the country. Forget market, the country is growing. And that is all prediction and all probability that will continue to grow for the coming decade. Make use of that. Don't be over conservative in these portfolios, but manage them in a manner that clients' aspirations are fulfilled. I can go on and on. I can talk forever. This is my pet passion, my subject of matter. I can go into minute details, big details, but I think the time is up. So I'll hand it over to Rishi or Kanaya, whosoever is taking over. Thank you very much.
Thank you so much, ma'am.
Thank you so much, Renu ma'am, for the valuable insights. I'm sure the audience now understands why retirement planning is so crucial in overall financial planning. And I think I'm quite impressed in terms of, that the abstractness of the life has to be, somewhere we have to be, good enough to understand that and measure it and then help the clients do that, because life and that retirement is like 3 decades and you have to manage things. So that is the biggest thing that we should learn. And it's very clear how the CFP certification can help someone gain expertise as far as the numbers part is concerned, and transform into a successful financial professional. So opening up numerous opportunities. So now, friends, I would just quickly go through the CFP program, and then we will have the Q&A. So the Certified Financial Planning Certification, friends, is the gold standard when it comes to personal finance. It is recognized in 27 countries, and these are all the developed countries. It's a unique 4-in-1 certification program where one of the USPs is that you, as people move in they clear different milestones, they get recognized in terms of certifications by the board. Right. So ideal for students, professionals, independent financial advisors, bankers, insurance agents, and all. It's the curriculum is designed and is focused on personal finance. Friends, in a typical sense, I would say it takes 6 to 12 months to complete the CFP certification, which is, in terms of value-wise, it's extremely valuable. But in terms of, let's say, if you compare it with any other certifications, you can manage it within a year. What is the eligibility of this program? So this FP, the Financial Planning Standards Board, says that, anyone who is minimum 10 plus 2, 18 years of age, there's no restriction of streams or percentages, can join the CFP certification. But just one thing that to get the certification, friends, everybody has to be, aspirants have to be a minimum graduate and minimum 3 years of experience in the banking, financial services, insurance sector. If that's not available, there's nothing to worry about. ICFP is going to help in terms of, helping you with 1 year of supervised articleship training under a practicing CFP. So that suffices. So that certification experience is not a problem at all. We are there to help you there. In terms of the program curriculum, when we talk about the hard skills, in level 1, friends, we teach you on 3 modules, basically 3 core specializations. The first one is personal financial management, which is hardcore time value of money and numbers. Second is investment planning, asset management, all knowledge about what are the various asset classes, how do they behave, what are portfolios, what is risk in portfolios, how do you measure that, define that, behavioral finance, and things like that. Third is, friends, is regulatory environment and legal compliances. The BFSI sector is under the oversight of SEBI and RBI. So we'll make you learn what all things are required over there. Coming to level 2, friends, it is retirement and tax planning specialist. So retirement planning is as ma'am was mentioning, it's the core module, core skill that you will learn over here. We'll help you understand all these strategies when it comes to what is accumulation, all kind of investment, retirement focused products which are available in India and abroad, and how do you really devise or design a withdrawal strategy. So everything end to end is covered in the retirement planning module. Next, friends, is tax planning, which you will be learning about all the 5 heads of income and how the taxability largely happens, because tax is one thing you will have to ensure that you are investing for the client in products where he can save some taxes, or to make the overall portfolio and his goals tax efficient. Coming to level 3, friends, it is risk and estate planning specialist. We have 2 modules over here, insurance and estate planning. So insurance, friends, is extremely important, and especially during our working years, and even after, in terms of life insurance, or in terms of a life insurance, and also the health insurance parts. Succession planning, friends, all of us work throughout our lives, and we should ensure that our assets are they're passed to the next generations in a very peaceful manner. If things can happen peacefully, why not do that? So estate planning definitely helps, and is one of the advantages, because we do not usually have succession planning anywhere in any of the curriculums in India. Now, friends, coming to the CFP final level, there are 2 aspects to it. So one is you have to submit a financial plan, prepare a financial plan and submit to the board for approval. And there is a final exam that has to be cleared. So once that happens, then you get the CFP certification mark. Now, the story doesn't only end at the hard skills. Over the years, the curriculum has been developed in terms of also guiding candidates on their soft skill aspects. So when CFP's friends are trained on what are the practice standards they have to follow anywhere in the world that they service. What are the rules of conducts? They have to follow a set rule of conducts also. Professional responsibility. How do you discover goals? How do you discover what are the aspirations of clients? Yes, we'll give you insights. You'll be trained on that as well. Empathetic listening skills, appreciative inquiry, critical thinking, which are extremely important skills to engage with clients and to gain trust. That is something that you will also be trained. So yes, the curriculum has upgraded in terms of additions of soft skills. Now, why should you choose ICFP as your learning training partner for the CFP certification? Friends, we are the first and the largest education provider of CFP in India. Friends, we have been in this business for more than 2 decades now, in fact, 22 years. We are part of Bajaj Capital Group, which is one of the India's leading financial services industry for more than 6 decades. And in fact, to tell you, the CFP practice, the program was brought to India by Bajaj Capital. Most experienced and qualified CFP faculties are there with us. The faculties are CFPs, CFAs, chartered accountants, PhDs. Practicing CFPs as mentors and coaches. Former FPSP India Director, Madam Madhusuna, is our program head and academic dean. Highest number of CFP certificates and passing percentage are from ICFP. These are our star faculties, friends. Just to let you know, they have all of our faculties have a combined education experience, training experience of more than 130 years. And especially if I focus only on CFP, it's more than 75 years. So that kind of a thing, it is what you get once you join ICFP. Friends, these are just some of the results that I just want to share with you. In the month of May 24, we had 100% passing rate in the FPSB Risk and Estate Planning Specialist certification, which is level 3. And in the month of June 24, in the CFP final exam, friends, we had a 88% passing percentage, which is 14 people out of 16 had cleared. So these are very fresh numbers, and that shows the way we teach people and the success that they get out of it. Friends, our study options are currently on Zoom platform, so we'll have it virtual at the moment. We used to have physical campuses, but after COVID, I think the trend is now towards more of online. Friends, the sessions, online sessions happen weekdays. It's going to be late evenings, and weekends, Saturdays, Sundays. Saturday is late evening and Sunday morning is Sunday is morning, because we understand the way people must be working. Recordings are also shared for you. Just to let you know, friends, over here, that ICFP as a unique provision whereby what happens is, if you are not able to commit on a particular time, let's say specific on a weekday or a weekend, to join us for your CFP trainings, we also provide you another way whereby you can join the e-learning batch. What happens there is you get access to our LMS portal, whereby you will have access to pre-recorded lectures from the same faculties. It's just that you can watch them at your go, as per your convenience, but the entire handholding and the entire way we take every candidate remains the same. It's just that the medium is a little different depending upon your availability and your availability for this CFP. India's most comprehensive CFP study material comes from ICFP. Friends, we provide you one concept book, one workbook for each module. So it's a big bag of books that come from ICFP. In fact, we are the first ones who developed the curriculum of CFP in India way back in somewhere in 2000. We continue to give you group projects. There are guest lectures which happen similar to the one that's happening today. You get access to our state-of-the-art learning management system, which has all the recordings there before you. There are online mock tests where you can compare and to understand what are the gaps, and to see that you are doing very, very well. Assignments are provided by the faculties in sessions, and before the sessions end, before the exams every month, you have doubt clearing sessions. So these are the things that come to you as far as the learning resources is concerned. Now, friends, let's talk about the fee, respective fees. So, friends, the FPSB board, the parent board of the CFP certification, in the regular pathway, they charge 18,000 rupees as the registration fee, which is valid for 1 year. After that, friends, the board has made it compulsory to buy the ebook content from them. For level 1 to 3, friends, it is chargeable at 6,500, and for the final level, it is 13,000. We don't have to commit 32,500 at the same time at one instance. It will happen as you move towards the higher levels. The exam fee, friends, as I was talking about this, that FPSB conducts exams after every level, and you get recognized also with a certification. The exam fee is 6,750 for each level 1 to 3. And for CFP final, it is 13,000 rupees. As I had mentioned to you about the financial plan assessment, which has to be submitted to the board for approval, the fee for that is 10,500 rupees. So this is, friends, for the regular pathway. Now, just to let you know, if you recall back, I had discussed about that you can complete CFP, within 6 months as well. That pathway, friends, is known as the fast track pathway. But the board requires eligibility in terms of minimum education and experience. Now, in terms of education, they say if there's a chartered accountant or a CA intern with 3 years of articleship plus BCom, or a CFA, CPA, ACCA, CMA, MBA or a PGDM in any kind of a stream, CIB plus BCom. So these are the educations. If you have them, yes, you would be eligible. Along with it, there's a requirement of 3 years of prior work experience in the BFSI sector. If you are eligible for these two, you can straight away go to level 4 and you get an exemption for level 1 to level 3. Friends, the fee of the board here is as follows. For the validation, they charge 5,000 rupees. Registration and FPSB content is 34,000 rupees. And the financial plan assessment and the CFP final exam is same as in the case of regular, 10,500 and 13,000 rupees. Now, after the board fee, friends, I'll just share with you the fee that ICFP is going to charge for hand-holding you to success. Friends, when I talk about the virtual learning, which is where the instructor-led sessions are going to happen, live Zoom sessions, the faculty comes in. For each level, friends, the fee is 20,000 rupees. But if you go for a 4-in-1 study plan, we charge you 60,000 rupees. For the e-learning, friends, which I said, which is access to LMS pre-recorded sessions from the same faculties, the 4-in-1 study fee is 45,000 rupees. For the fast track pathway, where along with if you are eligible, you can go straight away for level 4. The fee is 35,000 rupees, friends. On this, friends, just to let you know, you have to just give us a down payment of 10,000, and the rest can be arranged through our NBFC partner in 6 easy EMIs at 0% interest. What are the offer for today? I think you've been here today, Saturday, and we've had a very good session, insightful session. Friends, we are giving a flat 3,000 rupees discount on our course fee, ICFP course fee across the virtual learning, e-learning, and fast track pathway. Along with it, friends, I had mentioned to you about the FPSB content that has to be purchased mandatorily. We will provide you discount coupons, which is up to 50% discount on the e-learning content, which comes to 16,250 rupees of savings you can make. Along with this, friends, we'll provide you 15 hours of NISF 5A, which is the mutual fund distributor module, which you can use these sessions and easily crack it. And the story doesn't end over here. We'll also give you 7 hours of premium recorded lectures for which can help you, gain understanding of how do you do technical analysis and technical, and you can, even invest in the stock markets. Friends, there's a special offer today for people who will join us in the regular pathway where the 4 levels are there. Candidates who join us today, and this is only for today, we bring an offer which is nowhere there in the industry, which is once you clear your CFP final, the first year certification fee of 10,500 rupees will be on us. So we'll bear that cost. It's a great offer. If I add everything, friends, you will save minimum. I think I would say not 30, but if you add the certification fee, it will be more than 40,000 rupees. And as I mentioned, you have to just give us 10,000 rupees for the down payment, and rest can be managed in easy EMIs. Friends, our number is 9711437779. You can call us. Our expert counselors will help you with all your kind of queries and quickly get you registered for the CFP, this great certification CFP. Friends, now we are open for the Q&A, so please feel free to ask your questions, and we'll certainly take them over here.
So friends, you can also raise your hand, and you can we will unmute you one by one, and you can talk to our speaker as well. Also, if you have any question, you can write in the Q&A session, and we will take every questions. The one question I can see is FBSB registration fee needs to be paid at the time of giving exams. Rishi, can you please take this question?
Yes. My dear friend, the registration fee is not to be paid at the time of giving exam. Rather than, I would say, within a month, you should register with the board. At the time of giving exam, you will have to pay the exam fee. So registration, you might not do it immediately, but once, let's say you are 1 month in the system with us, you've been trained in at least one of the modules of level 1, then I think you should register, because that also brings in, that kind of urgency also. So that is what we've seen, and the board also advises the same.
Yes, Chandanji, you can unmute yourself. You can ask your question.
Yeah, hi Rishi, good morning.
Hi.
See, can you just go on the module page, the module slide?
Okay.
There were 4 modules, right?
The 4 levels.
4 levels, sorry.
Yes, please.
So, in that, what I understand, just need to clarify that the CFP is, putting a more concentration on the retirement planning and tax planning, right? Because there is a separate full one level for that. So the question from my end is that the other financial product like the PMS, AIF, some sort of mutual funds or some other uh, uh, assets that is covered in level 1, or because retirement and insurance there is a separate level. So in the asset management level 1, that covers the all the asset types, or what?
All the assets in your PMS, and the industry trends in terms of fee, how's the fee charge, and all of that is covered in the level 1, and the module is investment planning, asset management.
Okay. And for once you may complete the level 1, so the tests, all the examinations, there are the objective based exams, or it's a case study
No,
sort of thing.
No, I'll tell you. Level 1, level 2, level 3 are objective-based exam. It is an MCQ-based with 4 options.
Okay.
And the level 4 is a case study-based exam, whereby you will be given a case study. You will have to, you will be given questions also in that. So you will have to basically help the client attain all his goals, retirement, education, vacation, everything. So estate planning as well, insurance as well. So comprehensive, so the level 4 exam is actually a culmination of every aspect that the client wants to become financially independent.
All right. And I was there in your last session as well. So what you have guided, what I remember is for appearing for level 1, I guess 2 to 3 months time is required, and after that maybe I guess what you have once we are acclimatized with this level 1 curriculum, then I guess 2 months is a decent period where we can go ahead and opt for. Is that my understanding correct, or?
Yeah, if you add it in total, I mean, you rightly said that level 1, because you've started and it takes a little more time. So if you add all the thing, it usually comes to around 8, maybe around 8 to 10 to 12 months, depending upon
Okay.
what speed you have. But yes, as I would have said it again, I would just reiterate that level 2 again is extremely important, retirement and taxation. Level 3 is a breeze. Once you're done with these two, then that is actually a breeze. And for final, again, you will have to give a little more, because it's numerical heavy, and this is case study based. So that's the way. But yes, we've seen even that people who come from maybe the industry, they don't take that much in level 1. 2 months is max tops that's required.
Okay, so to see the couple of questions I have answered in the Q&A session.
Okay.
I cannot see any question unanswered in here.
You have any questions for our guests, feel free to ask, because I think the 1 hour, I've learned so much in terms of retirement planning, and the way she's brought in is just fabulous. So Weekend training for virtual batch, how much time each level will be completed? Weekend training. See, I would say, in fact, because I was in the weekend batches, and I would say it takes around, I would say around 8 to 10 months to complete the entire curriculum. And based on that, you will have to decide how does it really go. I completed my CFP in, I think, or close to 11 months is what it took. So because you have to give it the exams also in between at times.
So Rishi, can you please go back to the costing FBSC
Yes,
board,
please.
then the
Yes, please. Yes, please. Yes, please. FPSB, okay. Mr. Gaur G has raised hand.
Okay.
Yes.
Just explain this slide one more time.
This one? Okay. So, friends, the FPSB charges 18,000 rupees for the registration. This registration is valid for 1 year. Don't worry that you might have to, you might be thinking that you will have to register once more. That's not required, because I'm pretty sure that if you clear even one exam within this 1 year, then you don't have to pay this 18,000. The FPSB ebooks, because the board mandates to buy ebooks, there, friends, the fee is 6,500 rupee level wise, from 1 to 3. And for final, it is 13,000 rupees. This is the place where we provide discount coupons, but it's only a webinar offer for today, which reduces this cost up to 50%. Then, friends, we have the FPSB exam fee, which is 6,750 for level 1, 2, 3. And finally, it is 13,000 rupees. And for the financial plan assessment, which is one part of the CFP final level, the fee is 10,500.
All right. So I believe Mr. DV, the board fee has clear to you now.
There's one question for Renu ma'am. I think before that, I think the DV has raised his hand. Yes, you can come in, sir.
Renu ma'am, are we still connected?
Yes, I'm here.
So one question is for you, ma'am.
Yep.
How hard it is to practice as a fee-based firm? Is it getting easier with younger generation, or is it easier with wealthier clients?
So if I put it, how hard is it? It is definitely not as easy as distribution, but at the same time, you have stickier clients, and you have a different level of relationship with your clients. So if I have to choose at any point in time, I'll choose only fee only practice, and I have chosen that. Is it easier with younger clients or wealthier clients? My observation has been that it's easier with educated clients. That is what has been till now. If I can think of clients who have come to us on their own, hung around with us forever, they're all educated people whom I could explain the concepts and who trust the knowledge. That is one differentiating factor I could see.
So, Mr. Gaur, you can unmute yourself. Please go ahead.
Yeah, hi. Can you hear me?
Yes, you are very loud and clear. Please go ahead.
Yeah, good morning. So my question is, I am looking for CFP path, this fast track. And what I have is I've been working with the large bank for last 16 years. But I have been an RM in initial year from 2008 to 2013, where I used to do investment planning and all that for customers. But since 2013, I'm in a different role. It is a product and a channel management role, wherein it is to drive sales and strategy and all planning. And also I have a PGDBM of 1 year, which I did in 2019. Yeah, it was 2002 to 2003. I did my BCom till 2001, and 2002 to 2003 I did a PGDBM, which is from University of Rajasthan. So do I qualify is my question.
MBA is required as far as my knowledge is for the fast track is concerned. The MBA 2 year of MBA is required, but at the same time, what we can do is we can get a soft check from the board. You please share your resume with us, and we will get a soft approval. If you are eligible, we will ask you to register for the fast track. Otherwise, you have to go with the
Cool.
Right.
So how long will you ask me to you will take this to get an approval, and will you confirm me over the mail that this is approved or not?
Someone from my team will connect with you and tell you this.
Take care. Right.
Okay, so Rishi, Shubham, we can only teach you the CFP things. We cannot help you with the SEBI RIA thing.
What is it?
Can you please provide a SEBI registered investment advisor 11 module record video?
Okay.
All right, so Rishi, I cannot see any question unanswered. Also, neither I can see any raised hand. So it's time to say thank you to everyone. Thank you so much, ma'am, for accepting my invitation. And thank you so much, everyone, for joining us this lovely morning. Have a good day. Signing off.
Thank you so much, ma'am. Thank you, ma'am.
Thank you. My pleasure. And friends, whosoever wants any information about RIAs, please reach out to Arya at arya.org.in. You can write a query over there and they will be able to answer your questions.
Thank you. Thank you, everyone.
Thank you very much. Bye-bye.